lost everything tomorrow. My account, my tools, my resources, and had to start learning how to trade all over again. This is exactly how I do it. And more importantly, this is how I do it without wasting 8 years like I did the first time around. Because 25 years ago, when I started out, there was no roadmap. I chased every shiny strategy, blew up accounts, and spent way too long thinking I had to trade 10 hours a day to make any progress. But now, having coached over 7,000 traders, I've seen the same mistakes on repeat. People jumping from pattern to pattern, trading with no rules, and quitting after a few bad weeks. Not because they're lazy, but because they're overwhelmed and alone. So in this video, I'm gonna give you the blueprint I wish someone had handed me when I was just starting out. A step-by-step plan to go from total beginner to confident, consistent trader without wasting years and without trading 12 hours a day. I'll show you how to learn smarter, trade cleaner, and actually build a system that you can grow. Whether you're starting with $0 or $100,000, we'll cover the exact strategy I start with in 2025, what tools I use, free and paid, and how to track your progress so you know that it's working. We're also gonna go over where I'd spend my time to get the results 10x faster. Let's hop on the charts and dive in. Let's talk about the phases of learning. Every trader, when they learn how to trade, goes through a 5-step process that really impacts your whole career. So let's talk about a student of mine, Josh, who really went through all of this just recently. And let's kind of dig into what these 5 steps are as every trader goes through them. So first of all, you have the overconfidence trap. Josh is trying a strategy. It's got a 60% win ratio for 3 years, right? It's been winning nonstop at just a steady rate, which is what trading is all about. But then the last 3 weeks, all of a sudden you start getting win, 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 win. The market starts getting a little volatile. All of a sudden, your wins are starting to stack up and you're really, really feeling yourself. And typically what'll happen as you're getting into this type of win streak is you're feeling unstoppable. You've got to increase risk. You've got looser rules. What starts to happen as you start to get into these winning streaks, your standards get loose, right? Instead of doing your morning routine, you're journaling, all of these like nitty gritty things that you are doing to get into the win streak, all of a sudden you decide after a hot day to treat yourself. I'm gonna go have a couple beers after work. I forgot to do my scans. I forgot to do my journal. You're not gonna notice any results the next day or the day after, but what happens is when you loosen those standards, it starts to compound. And when you start doing that over a period of days to weeks, the crash is coming right around the corner. You know, now you start to get on the edge, right? You're at the top of the arc and you have this certain arrogance. You're still winning, but your standards have loosened. You're taking on more size, you're being looser with your trades, but you're still winning because the market is hot and you're hot. So the numbers are just playing out. But inevitably, what happens is you're gonna get the reality check. This is kind of what happens to Josh, right? You know, you get on the win streak, you're no longer doing your journals, going out a little bit at night, having yourself a little pizza party, right? All these little things start stacking up. The standards have been reduced, and what got you to the place of winning is no longer there. You've lost that structure. So this is the reality check, where you're asking yourself, like, what just happened? I just wasted 3 years of steadiness and this epic hot streak because of my overconfidence, because of my arrogance, and the loosening of my standards. That shock comes in and you start the revenge trade. You all know what that means, right? You start to oversize, you start chasing everything, right? Your stock goes up, you chase it here. Inevitably pulls back, you sell it. Then it starts to bounce, you chase it here. Then it inevitably pulls back, you sell it. And now you chase it again. And you get stuck in this spin cycle of despair where you're buying high, selling low, you're oversizing, and poof, right? There goes all your hard work. It's heartbreaking. You have the ego collapse. Now look, you got a streak of just loss. And the problem is not the streak. The problem is that Josh is not zoomed out. His strategy says 60% in 3 years, not in 2 months. So what really happened? The losses exposed some flaws in his system, in his process. The ego crashes. Then the system hopping starts to begin, right? You start wondering, hey, my capital is getting low. Maybe I should get into options. Maybe I should do futures. Maybe I should take these prop firm challenges, right? And now what those things that were working for you, you're no longer doing. And your account starts to bleed. And then we all get stuck with these kind of common thoughts, right? Maybe I'm not cut out for it. Maybe my wife was right, that I should go get a job. Maybe the things that I was doing was just luck. Why did it all work before? And then, of course, the one that gets everybody is, I just need that one trade to recover all of this. We've all seen on Twitter or Discord, right, that like 5,000% options YOLO trade, right? And we all sat there and wondered, why not me, right? Why can't I take my 5,000 bucks and get in a 5,000% trade and have all this money? Yes, those are the pie in the sky trades. They never happen, right? The guy that hits that usually has like one contract and he's on his little Webull app, right? And he's sharing it all day. Come on, get out of here. That ain't a thing. During this time, you're going to have the dangerous behaviors, right? You got the revenge trading, buy high, sell low, short low, buy high. You start over trading, right? You were taking 3-4 trades a day. Now you're taking 50, 100. Guys, I've been to spots where I've taken literally over 1,000 day trades in a day when I'm on tilt and over trading. I'm talking to the point where, right, your arm hurts, your wrist hurts, like it feels like it's gonna fall off, like your fingers hurt, right? You abandon that journaling. The stuff that got you there, that process, that meticulous detail, no longer is there. And then you're risking more and more to do a little speed run to make the comeback. You know that if you do it the regular way, it's gonna take you 6 months. So what you start to do is YOLO some things, hoping that you can step to the front of the line and do this in a matter of weeks. Doesn't work like that. Now look, Josh needs a break even, but the problem is the monetary losses at some point. Look, well, you're left with 50K, right? So now if you make a 50% win, guess what? You're only at 75K. So you get a 50% gain on your $50,000 account and you're still at 75K. You need to make 100% return to get back to 100. So you lost 50%, but you need 100% to get back to even. And that is mathematically tough and mentally rough. Now, let's talk about the level up. At some point, you're going to get past all this, right? You're going to get to that next spot. You're going to level up. You're going to have consistency over flash. No longer are you chasing home runs. You're focused on those base hits. Guys, the reason that I'm still here after all these years is because I've been grinding it out day after day since 2008. Always just base hits, building on it. You realize that capital preservation is step one of wealth creation. Now look, at this point, you're going to have a system alignment. You found a strategy that fits your personality. I'm a momentum person. I'm always a go-go. I'm hyperactive. So I trade momentum stocks. I trend trade because that's what fits who I am and my personality. And so I've got something that totally works for me. Guys, when you find that, you're no longer second guessing or switching systems. Number 3, your risk management becomes natural. Look, when you're new, risk management is just like a big checklist, right? You're like, 1, size here, 2, stop here, 3, market this. And it's like, you have all these things and it's not intuitive. It's a checklist. It's boring. It's intimidating. And it's hard to remember everything. What happens is when you get to this level, it just becomes natural. Your sizing is clean. It's mechanical. It's all intuitive. You've internally accepted the rules and you know them without thought. Your drawdowns now are controlled. You're no longer emotionally attached to every trade. And now you're making data-driven adjustments. You're going to journal, review, and evolve based on stats, not vibes. Now, this is where you're going to track your edge, your setups, and your win rate. Now, this is the holy grail. This is where we all want to get to. Sustainable profit. This is where trading becomes boring. You're no longer on that dopamine roller coaster looking for the highs. It's clockwork now. You're just finding your edge. You've got a few simple things that you do and you're doing them day in and day out. The money now becomes just a byproduct of your process. You're not thinking about the money per trade. You're not spending the money before you earn it, right? We all do that when we're new. You're starting to think in terms of executing your edge and doing it flawlessly. This is when your freedom arrives. You're able to withdraw profits consistently. You build savings and you reinvest in some size, but also other assets. My belief is that day trading is great for income and making a lot of income. Then you want to take that and build other businesses, buy other assets. So no longer do you have to just sit there and worry about your day trading income. You're day trading, but you're using it as a tool to better your life and build assets. That's when you're getting the holy grail. This is where your self-awareness is going to be so high. You're going to realize when you're tilted, even before you get tilted, right? The seeds of tilt, you can feel it in your arms, right? It's like right in your mouse hand before it even happens. You're just tired, unfocused, like you know instantly when you're those things and what's going to cost you money, and you back away. You know when you need those days off. You know when you need to step away. You're just not at war with yourself anymore. There are dozens of solid setups out there. I've used a lot of them. Pullbacks to VWAP, red to green moves, bear flags, reversal traps. They all work if you know what you're doing. But if you're starting out or if you're spinning your wheels, it's not about knowing 10 setups. It's about mastering one. And after this course, you will exactly understand how to get here without suffering like Josh and have a consistent state of mind. Your goal isn't to be versatile, it's to be consistent. That's why I always recommend new or struggling traders focus on one setup. That one setup until it pays you like a job. Let's see the best 4 setups out there that I would recommend if you want to trade. And stay until the end, because the last one is the most beginner friendly. And you can leverage that if you want to just trade 30 to 60 minutes a day. So let's first talk about the quick pullback. I love this setup because it's got the best of all worlds. This is when you have a momentum stock that has a strong run in the morning and pulls back either to the 9 or 20 EMA as the traders take profit. It's a good low risk opportunity to catch the next leg of the move. But this setup will really help new traders because it prevents you from chasing, right? A lot of times traders want to chase all these breakouts and all this momentum, and it gets them in so much trouble. This is a setup that you can do that'll keep you out of that trouble. The ideal candidate for this is a stock that has a big daily chart that's either busting loose or it's got some type of earnings or news out there with above average volume. The setup is simple and it tends to work right away. So this is a trade that I did on NBIS just recently when the AI boom was happening. So when you see a setup like this, like you see here, like you gapped up right to about $45. You spent the next 15 minutes pulling back right into the zone between the 9 and 20 EMA. I like to shade that in so that I can always have it visually right there. So when you get a wick down into this zone, you want to purchase it, put a stop loss right at the bottom of the candle, all right? This is going to get you early into the pattern where you're not chasing some level of strength. Now that you're into this thing, let's say you got this at 41, 50, 42, now the old high is here at 45, you've got a great reward to risk right there to get some real momentum going. And then if it breaks over there, then the sky's the limit. This setup is really best in the first hour, and you're not supposed to hold it all day. It's a quick day trade setup for catching morning momentum. So you get a spike up, a pullback into the EMA. When you get a green candle down into that zone, now you got this thing back to the upside and you're off to the races. I love that setup for you new traders. Let's talk about intraday flag breakouts because this is a simple pattern that you're going to see all the time. It's actually one of the first setups I teach my new students in my 60-day bootcamp because it's so easy to identify, but also it shows up a lot. And so you're going to be able to find it every day. This is where a momentum stock will run up and then consolidate just under a breakout level. It's often found near the high of the day or the high of the previous days. Now you can do this on any time frame. So if you're doing this on a daily chart, a 60-minute chart, or even a 5-minute chart, it's gonna work. So you can see it and find it across all time frames. It often looks like a flat top breakout pattern with multiple taps at the breakout level. So what you're looking for is some level of morning momentum. And what's gonna happen is that your morning setups plays like the quick pullback buy. Well, during the afternoon, as the market shifts and starts to consolidate, you're going to want different patterns. You're gonna want kind of retracement or consolidation patterns as the market slows down. So the flag breakout is a great pattern because that midday, when you're consolidating, you're essentially building up power for the next move. So what's gonna happen is you're gonna go sideways for a period of time. You're gonna let your 9 EMA catch up right up under the breakout level. Now, when you finally break out over it, you're going to buy, set your stop loss right under, and now you're into this thing for the thrust. Now look, this is just day trading. You take your quick hits and then you move on. And then as you start to go sideways, right, what you're going to be doing is purchasing again, stop loss under, and then you sell into these spikes. What I usually will do is sell half into the spike and then trail up my stop on the rest. So you can trade around the position. You buy some in the morning, you sell some, you rebuy, you sell some, you rebuy, sell some. That's the game of day trading. I love this pattern though for you guys because it's so easy to identify, right? It literally should look like a flag, nothing else. Now, let's talk about the third pattern. I love this one. This is also a midday pattern that you can utilize right away. This is the VWAP bounce. VWAP stands for volume weighted average price. What VWAP does is it reflects price levels and it's just weighted by volume. How I look at it's the average price of all the buyers and sellers in a stock. We use it as the line in the sand on a particular name. So when we want to look at VWAPs, there's a handful of ways to use them. You can use a bounce, a fade, and crossover. So there's 4 different uses. I think the easiest one is to do VWAP bounce. What a VWAP bounce is when you have a momentum stock, during the midday, oftentimes they'll pull back to the VWAP. So you see something like this, you get a big run in the morning and you pull back into the 9 EMA. What pattern is that? We just learned it. That's your quick pullback buy. Good job. So now you get into this little pop over here, sell, sell, sell. You pull back to the 9 EMA around 11 o'clock. That's not a buy. The 9 EMA don't shine midday. The 9 don't shine midday. Always remember that. As the midday comes, that's your 11 o'clock till your 1 p.m., you want the deeper pullbacks. I love getting the pullbacks into the VWAP. When you get a green candle to hold, you're going to purchase. You put your stop loss below, you got your first target over here, and then you can trail up the stop along the rest. I like to sell into the old highs usually in case the breakout fails, and then I like to trail using my 9 EMA along the way. I may have like a third scale out in the middle if I think the stock has a lot of room to run or if you're in a big momentum market. So what I mean by that is say you have 2,000 shares. Normally I'll sell 1,000, and then 500 and 500. So you got 3 sells. But if the market stinks, right, and you're just getting a choppy market, you're gonna do just 1,000 and 1,000 because you're not gonna get big trenders. Now, if you're in like a runaway market, then having a couple runners really pays you. But those type of markets only come around maybe 1 month out of the year. So I wouldn't worry too much about those. Now, look, this is the setup that I think is gonna be easy for a lot of you guys, all right? This is the opening range breakout. The opening range breakout works nearly every single day. It's very rare you don't find one somewhere, all right? And most of the time, if you have a watch list of 20 names, 6 or 7 of them are gonna do them either to the upside or downside. So I love this pattern for you guys. The execution of this focuses on the price range established during the first minutes of a market session. Disclaimer, if you're working full time and have limited time to trade or you're just starting, this is one setup that is worth mastering. So the opening range breakout is really about settling into a range after the open. So most of the time the stock's gonna have a PR, so you'll get a gap like this. And so when you have a stock like this, it pops up to 575, you need minimum 3 candles, right? Minimum 3 candles to go sideways. And as you start to pop through, you're gonna buy, put your stop loss under the VWAP, and now you've got yourself into a trender. So what you're looking for is a hot stock, right? Something with a good daily chart or something that's got earnings or news out When it opens those first couple candles, you're going to set out a range. You need minimum 3 candles. When that range is taken out, you can purchase it, and the stop loss always goes under the VWAP. It's the easiest place to put it on this setup. Now look, you get 3-to-1 reward risk, sell some, right? Don't be greedy. And then use your 9 EMA to kind of trail this thing along the way. Look, a lot of times you can kind of sell, a partial at say 1-to-1, some at 1-to-2, so on and so forth. But my thinking is like, if you're in a hot market, take the big chunk at a 3-to-1, 2-to-1, and then you can kind of trail up using the 9 EMA on the rest. I think that's the easiest way to do it. If you're in a not so hot market, your targets are going to be reduced. You may sell at 1.5-to-1, 2-to-1, or even be a little bit more compressed because the market is just not giving you those big ranges. So how do you find these ORBs? Well, there's a couple ways to do it. So number one, you want to identify pre-market gappers, right? You're looking for earnings or news catalysts. I use TC2000. There are other platforms out there like Finviz. You got Webull, you got ThinkerCrap. You got a whole host of these. Then you're going to look for volume. You're going to look for the gap and then news. And we'll dig a little bit deeper in this in a few minutes. And then what we're going to do is as we sift through them, we're going to filter for 3 to 5 hot candidates to trade. My Gapper scan looks pretty simple, right? This is pre-built into TC2000. You have a pre-market tab here. It's pretty fresh. Like you'll be able to see the daily chart, the intraday chart, and then the news too. So as you're clicking through these, you'll be able to see the news, you'll be able to see the gap, and you'll have all your time frames on there. So it's just a pretty easy way to stay organized. If you use like Stock Market Watch or, Market Chameleon or one of these kind of tools, they're free, but then you got to like look for the gap, then input in a charting platform, then go here, then Google to read the news. And it's just a big cluster. So I prefer to have more of an all-in-one setup. It just makes your life a lot easier. So why do you trade the ORB? Well, number one, it's simple to learn. For new traders, simple is great. And it's because something is simple doesn't mean that it is not a moneymaker or that you're going to make less money, right? Simple is fantastic and it's repeatable. This also happens every day in the first 15-30 minutes. And look, it fits full-timers, part-timers, small accounts, and large accounts. And of course, this setup is so easy to backtest and refine. You get so many opportunities of this every day, and backtesting and refining this is such an easy thing to do. What to look for in the morning. So look, once you've locked in that one setup, whether it's ORB or another one that fits your style, the next big leap isn't about finding more patterns. It's about executing them better. Because trust me, most traders don't fail from bad setups. They fail from poor entries, oversized trades, and emotional exits. So in the next step, I'll show you the exact execution habits that separate amateurs from consistent full-time traders. I got a handful of things that I like to do, right? First, I start looking for the gappers, all right? 4 to 25% in the pre-market if you're looking at small caps. For large caps, anything over 2%, I'm interested in. We want to have some minimum volume thresholds that we'll go into in a hot second. So if you're trading small caps, you want to have ideally 1 million shares plus traded before the market opens. If you're trading medium to large cap names, I would say 250 is a good idea. There's nothing worse than being in something illiquid. You read some PR, you think it's hot, but there's nobody buying in the pre-market, then you end up being the only buyer. Well, guess what? The market opens and the stock will tank because you're the only one in it. I've seen that happen so many times. We need to see some level of interest in the pre-market. We're not economists here, right? If we're the only ones that think the PR is good, there's a good shot that it's not. Now look, in terms of news catalysts, there's all sorts of them out there. But for me, I always think earnings beats. When earnings beat is, hey, we expect to make $1 billion. We made $6 billion. That's a stock that's probably going to get reevaluated by traders, investors, analysts, and those can have really, really big pushes. FDA approvals, analyst upgrades, press releases. These are the type of names that can really get going. For example, in our chat room today, right? And I was talking about this on Twitter. When you're looking at the morning, what we're looking for is pieces of news that are impacting the market or individual stocks or even sectors. So for example, this morning, the semiconductor market had news out based on the TXN earnings. And so this was a trade that we were doing on Soxel, which is just the most simple ORB pattern you can do. So you get a gap up in Soxel at $11, and you build a little bit of a range here right at 11.05 or 11.10, give or take. When you break over the opening range, you're going to put your stop loss right under the VWAP. You got basically 10 cents risk on something like this, and now you're playing this thing to the upside. The big thing on this, of course, is their morning patterns. After the morning is done, you want to kind of sell out, and then you can always regurgitate. If you notice, we learned a flag pattern here, and we did one of those. You can take any of those other setups. If you're a swing trader, of course, you could hold it for the whole day. The whole purpose of opening range breakout is to get those kind of 3 to 5 to 6 candle thrusts and get out. This is a hit and run setup, nothing more. It's meant for the open, hence the news, opening range breakout. Tools you can use. Guys, there's scanners galore out in the markets right now. When I first started trading, there was like 2. Now you got them, free ones, paid ones, they're everywhere. TC2000 is pretty good. Webull has a pretty good scanner. Thinkercrap has a scanner. Some people like Finviz. I find it a little bit clunky for my personal taste, but they all will suffice. Like, you don't need some rocket science platform to give you some gappers in the morning. So you want to filter by gap percentage. You can add in floats if you're trading small caps or ATR. Look at the relative volume, and then of course you cross-check with the news feed. It is ideal if you can just get all of those into one, so you can check the news, you can check the gaps, everything. Most platforms should do that. You know, TrendSpider, TradingView, there's so many out there right now. They should be able to do that. If you can't, you could take my layout in TC2000. I'll leave it in the comments for you guys. Moving on to step 4, how to enter trades. So remember when we were looking at the Soxel, right? You had a thrust at the open, you had the range of the opening candle. Then the second candle, you went sideways. Third candle, you take it out. You can do this anytime there's news coming out on a name. Like, you don't have to sit there and always just be counting the spots. It is a simple matter of thrust, sideways, 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 sideways. When you take out the range, put your stop loss below the VWAP, and now you're into this thing. Now, the goal here, ideally, is to get 2 to 3 to 1 reward to risk. You sell some, sell into the next spike, a couple more points as the RR expands. And then look, you can trail up the rest along the 9 EMA. That's what a lot of traders will do. Theoretically, that's kind of what I should do. But my preference is always to be selling into chunks. I like to be proactive instead of reactive. What I mean by proactive is it's my choice to sell versus like a stock starts to go down and then I'm forced to sell. I hate that stuff. Like, that's when I make terrible mistakes. So always be mindful. Spike up, sideways, 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 minimum 3 candles. And look, if you have some midday news, like a stock gets some FDA approval or something like that in the middle of the day, and it's just been flatlining all day, you can treat that as an open and do the same pattern as you've got something fresh that's in the air. So you can use this in numerous different ways. Now, let's look at step 5, how to manage the trade like a pro. So my profit-taking system, as we've talked about it numerous times already, is pretty simple. Into that first thrust, if I get 2 to 1, 3 to 1 reward to risk, I'm going to sell half. Meaning, if I have 2,000 shares, I'm going to sell 1,000 into that thrust. My second target, I will use my EMAs and try to keep trailing higher. And when I get a bigger RR, I will take off another partial. And then I will use the rest of it to try to go for the bigger trade, the home run, where you're looking for a pure extension. Keep mind of the ATR of a stock. If you catch a stock at ORB or something in the morning, it'll often, if it hits its ATR, like in the first, like say 10, 15 minutes, that's usually going to be the high for it for a few hours. So you can use your ATR to sell into stocks also. I think that's probably the easiest way. So to recap, 2 to 1, 3 to 1, sell half. Use your 9 EMAs, and as you get extensions from them, keep scaling out partials. If you have a big trade, you can take 2,000 shares, you sell 1,000, 500, 500. You have 200 shares, you sell 100, 50, 50. And guys, one thing to be mindful of is if the market is choppy, then just sell in halves. You're not going to get that big home run because the market is not in a spot where you're going to have that kind of action. Now, let's go into step number 6, how to practice without losing money. So number 1, start with a sim account. Guys, this is so easy. It's a no-brainer for you. There's sim accounts everywhere now. TradingView, Webull, Thinkorswim, TC2000, every charting platform, every broker will have a sim account for you. Treat it like it's real. Fund it with a realistic amount. A lot of brokers will put like $1 million or $200,000. Look, you're not coming to the table with that, right? If you got $5,000, put that in there. $15,000, put that in there. And start practicing like it's real. You got to gamify it. You can't go live till you beat this game. If you can't beat the sim game, you're not beating the real life game anyways. So take those trades seriously and build up the muscle memory. You need to see certain patterns maybe 1,000 times before it feels natural, before it's like a sixth sense for you. Then look, use the replay mode to backtest setups. This is the best way to get more and more reps, all right? When you are doing live simulations, you might get 4 or 5 reps during the day on a certain pattern. You use this replay mode, you go like at a 10x speed, for example, you might be able to do 20, 30 of a pattern within an hour because it's moving so fast and you can find more opportunities for them. So if you're doing something like an ORB or a pullback trade, you could just hammer, 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 hammer using replay mode. Most platforms have a bar replay tool. You can use them to walk through the trades just like it's live, and then you speed it up. If you can trade on speed ups, then, you know, when it's just moving 1-to-1, you're gonna be fine. The key is don't just watch. Click those buttons, set your stop losses, manage the trades like it's real. And guys, track everything, right? You see it, track it till you know what's important and what's not for you. This is where 90% of beginners fall off. Let's go to step 7. Start small, scale smart. Guys, when you're ready to go live, don't go all in. Instead, start with what we call a confidence size account. Small share size, defined risk per trade, and focus on executing cleanly, not making big money. You're still in training, but now the game, it's real. Here's a rule I give to all my newer students. Don't scale your size until you've had 20 trades with perfect discipline. Because look, it's not just about profits, it's about trust. If you can trust yourself to follow the rules with small size, the money is gonna follow. Now look, the bonus, all right? The bonus. Build a daily routine that works for you. One of the biggest unlocks I've seen for new traders, it's not just strategy, it's structure. It's a routine that keeps you sharp and focused and consistent. So review your watch list each morning. Do a quick mindset check before the bell. Trade your plan and then journal immediately after. Guys, you gotta disconnect when you're done. Protect your energy at all costs. As you go through your trading journey, you'll see that when you make a lot of trades, it is mentally taxing. It is sucking energy right out of your brain. You've got to find ways to recharge. You don't need to trade all day to get results. You just need a repeatable rhythm that fits your life. Guys, when I trade all day and into the close, into the afternoon, it's usually because I'm on tilt and I end up making so many trades that the next day is a wash too because I'm so beaten down. My best days are when I trade in the morning and I'm gone. I do my thing and I come back the next day super refreshed and ready to attack. All right. That might have been a long one, but you made it this far. Here's what I want you to know. You don't have to figure all this out alone. Inside my free trading community, we trade live together 3 times a week. You'll see me walk through real setups, call out entries, and break everything down in real time. And the best part, this video is the free $3,000 course, the same one that's helped thousands of traders. And now it's 100% free. Why? because this is about more than just selling courses. It's about helping real people become confident and independent traders. Inside the community, you'll also find details on our bootcamp, where I work with a small group of traders directly to help them build some real consistency in 60 days or less. If that's something you're ready for, awesome. You'll see the path inside. But at the very least, grab this free course, implement everything, take some action. Come to a live session this week, and let's finally get your trading on track, but for real this time. All the links are in the description. Thanks for being here, and I'll see you on the inside.